Hello friends, welcome to this brand new series on stock market indicators and oscillators. I'm Aditya from Mostly Bearish. In this playlist that I'm going to be creating short videos about different types of indicators and oscillators, what they mean and how they work. Today, we are going to be talking about what indicators are, the different types of indicators, the different categories of indicators, and our oscillators indicators as well. So let's get started. But before that, if you're new to stock market and you're learning or even advanced and you want to refresh your mind about candlestick analysis, which is basically price action, I've already created series of videos about particular candlesticks which will help you, mainly because I talk about how the candle looks and even show it on charts as well. If you see here, this is a playlist which I've created about every single candlestick and the different types of patterns that candlestick form. Leaving the link in the description so that you can understand better, and every video is small so that you will be saving time and getting precise understanding about the candlestick itself. So now let's get started with what indicators are. Now we know that there is a fluctuation in price always when the markets are open. Price does not stay stable. Now based on the price, volume and historical data, there are calculations made, and every indicator has a different type of calculation. Indicators are nothing but some format of a graph or a chart which will actually help you understand what is actually happening in the market, and it will help you take your decisions better. I always say, just based on indicators, don't take any trade. Indicators will just help you make your trade execution better, and it will give you an analysis of what are the different possibilities. Now coming to the second part, there are different types of indicators. There are bounded indicators, there are non-bounded indicators, and there are overlay indicators. Now giving you an example, a bounded indicator we can also call oscillator. Bounded in the sense between two ranges, these are bounded. We will be talking about oscillators in the second half of the video, but try to understand the difference itself. Non-bounded indicators are basically, they don't have a limit. They are not bounded between two numbers. And the way they move depends on the prices, momentum, and the historical data itself. The third is overlay indicators. Overlay indicators are basically indicators which are on top of the graph. These are not separate, these are on top of the graph. For example, moving averages are overlay indicators, Bollinger Bands are overlay indicators, Ichimoku Cloud are overlay indicators. They happen to come on top of the charts itself. Now coming to the categories of indicators, there are two main categories, leading indicators and lagging indicators. Why do we call this that? A leading indicator is basically an indicator which tells you before the trend has actually changed. RSI, Relative Strength Index, is a leading indicator. It has two ranges, that is overbought, oversold. So when the prices move to the overbought region, they are actually showing you in advance that there might be a change in the trend. That is why we call them leading indicators. But always be aware about leading indicators because they are known to give you false signal as well. Now, the second is lagging indicators. Lagging indicators, I want to give you an example to make you understand. I don't want to talk about theory too much, but examples will make you understand. MACD is a lagging indicator. Once the trend has already changed, right? The trend is already changed. From an uptrend, the change of trend has become a downtrend. The lagging indicators will indicate once they have already changed. Now, why people choose to use lagging indicators? Already there is a confirmation about the trend change. The indicator is also telling there is a trend change, and based on this, we can do our analysis and take our entry and exit positions. Coming to the last part of the video, what are oscillators? Are oscillators indicators? Yes. Oscillators also are indicators mainly because on a chart format, they provide us information. The only difference is they are within a range. The movement is on two extreme, the top extreme or a lower extreme. Now how this work is, they can go to a overbought area where the prices will start coming down, or oversold area where the prices have chances of coming up. I hope you guys have understood the different types of indicators, what they are. So let's take a recap about this video itself. First of all, we spoke about what indicators are. They are visual confirmation tools which will help us in trading. The second is the different types, that is overlay indicators, bounded indicators and non-bounded indicators. The third, the different categories of indicators, that is leading indicator and lagging indicators. I hope you have understood. Leading indicators are known to give false breakouts as well, so be careful about that. And lagging indicators can give you an indication once a big move also is done, so always be careful about that as well. Finally, we spoke about oscillators. Oscillators are nothing but movement which happen between two extremes, that is the top extreme and lower extreme, which will help you understand how to enter a trade or exit a trade. So I hope you guys have learned something out of this video. And in the upcoming videos, we'll be particularly talking about specific indicators and oscillators so that you get an understanding about how they actually work. Make sure you subscribe to Mostly Bearish and press the bell icon so that you don't miss out on any updates from my side. Thank you so much for watching.